Good morning, everyone. This is Area Mays with Let's Talk About Real Estate. I'm a licensed real estate broker in the Mississippi, Tennessee area that's serving all of your real estate needs. And I'm so glad that you're logged on today so we can discuss real estate, your real estate needs, and what, if you have questions, we can get you answers about that. And then to tell you a little bit about what's going on in the market. As we've said in previous webinars, that we look at purchasing real estate or investing in real estate that can be generational wealth that can be handed down from family member to family member. So we want everyone who wants to be a homeowner to take advantage of the opportunity to own their own home, a place that they would love coming home to and being their investment so that they can have for future purposes to take equity out of their home or whatever needs they may want. Some people transfer their houses to their children's. So it's so many advantages of purchasing a home compared to renting a house. So we want to educate people as much as possible. We know that some of the important factors that is involved when you get ready to purchase a house is your credit score. And if a person asks, what do my credit score needs to be? I would recommend and say at least a 620, a 640, a 660 is better because some of the down payment assistance that you may desire to get or grant money may require that you have a higher credit score. Some as much as 640 to 660. So if you haven't saved up a whole lot of money to prepare to purchase for a home, then getting down payment assistance definitely would help you, but you do want to get your credit score up to par. And then, of course, there are some benefits in different locations where there's 100% grant money available for home buyers when you buy a home. So, you got a lot of benefits that you can take advantage of when you're purchasing a home. And I highly recommend that when you get ready to purchase a house, as I said in the past, is that you want to get pre-approved. Now, if you talk with a realtor, that's absolutely fine, and they can tell you or recommend you to a loan officer, but you want to get your pre-approval because that's your roadmap for searching for your new home, knowing how much money that you qualify for, rather than to go out and start looking for a house and maybe not qualified for it. So getting pre-approved is the first step to purchasing a home. And then of course, getting you a good realtor that's knowledgeable of the market and that knows what's going on can help you with the benefits that you can take advantage of, knowing the knowledge of the grant money that's available, the down payment assistance, the different kinds of loans. You got the FHA loan, the VA loan, the USDA loan, and there's a few more other little loans for investors, but those are your main primary loans that a new home buyer would get. And with a USDA loan, and it has to be in a USDA area, that's automatically a 100% loan that you don't have to come out of pocket with a down payment. With an FHA loan, you have to come out of pocket with 3.5% down payment unless you get some grant money or unless you can get some down payment assistance. Then, of course, you can ask the seller to pay your closing costs. The same thing with the conventional and the USDA loan. You can always ask the seller to pay your closing costs. After you got the USDA, you got the conventional, you got the FHA. Conventional loan, it varies how much you have to pay down for that. But some conventional loans don't have PMI, and some of you may say, well, what is PMI? That's your premium mortgage insurance that's attached to an FHA loan and possibly to some conventional loans. But with conventional loan, the PMI can drop off. With the FHA loan, the PMI is for the life of the loan. However, as you own a home and you decide to refinance from an FHA to a conventional, then you can possibly get a conventional loan with no PMI, which means that you may be paying a little bit less for your monthly mortgage payment. So knowing all those benefits is really good. Also, if you live in the state of Mississippi, you can file for your homestead. And since we're coming to the end of the year, your homestead exemption filing can only be done between January the 1st, which of course, January 1st is New Year's Day. So let's say January the 2nd to March the 31st. So we want to be sure that All homeowners know that they can take advantage of the homestead exemption in the state of Mississippi. And what that means is that you get a $300 a year credit off of your real estate taxes. And then if you over 65, you get a bigger discount from your taxes, off your taxes. If you're 100% disabled veteran, then you do not have to pay real estate taxes. And you would not believe that it's a lot of people that don't know this here. And I have even come in contact with some people that maybe have owned a home for 20 and 30 years and never known that they could take advantage of the homestead exemption. And some of them has been over 65, which means they would have got a bigger discount. If you disable, then you also can get a discount on your taxes. So you got a lot of perks when you own a home. And then, of course, elderly people or disabled people or veterans, you get more of a perk. And we want them to know about what they can take advantage of when they own a home. Also, just a little nugget is that if you're a disabled veteran in the state of Mississippi and you filed for your homestead and has gone to the tax assessor's office, then yes, there is a website. I'm sorry, I was reading that question. Yes, there is a website. But back to what I was saying is that if you are a 100% disabled veteran and you live in the state of Mississippi, you can also get your car tags for as low as $3 per vehicle. So if you know disabled veterans that possibly have not filed for their homestead or taken advantage of the benefit that they can get for a vehicle car tag for as low as $300 per vehicle, up to two vehicles, I believe. And you would go to, of course, you go to the tax assessor's office to file your homestead. And that's to answer the question. You said, is there a website? The website, that information should be on your county tax assessor's office website. So you should be able to find that there. And if not, then be sure and let me know, and then I can get that information to you all, depending on the location you're in. Each county has their own homestead location where they'll need to go and file the homestead. But again, if you have not filed for homestead and you own a home, be sure to do that in 2026. The only time that you can do that in a year is from January the 1st through March the 31st. If you miss that time frame, then you have to wait till the next year. However, it's never too late to go and file, and you only have to file one time on that particular property. So if you own if you sell that property, of course, that homestead is then removed from you. Then when you purchase a new home, you would go back and refile homestead again. Or if you have investment properties, you can only file homestead on your primary residence, not on your other investment properties. So be sure that if you know anybody that has not filed the homestead, that they can give them that information. If they need to call me, they can feel free to call me and we can discuss it, because we want to help everyone that wants to have a home, get into a home. We want to also help everyone that owns a home to be knowledgeable of what benefits they can take advantage of by being a homeowner. There's some perks in being a homeowner. So that we want everybody to know that. Today I'm gonna ask if you all have any questions, and I would definitely like to interact. But prior to that, I did take down a few notes that I wanted to discuss with you all of what's going on in the real estate market. The interest rates they're being stabilized right now. We haven't seen them lower as much as they was in the previous years, but we have seen them being a little bit stable. We've had some transaction that has closed in the 5.75, 5.95 interest rate, maybe some just a little bit lower than that. And that's good, because when we first started out the beginning of the year, I believe interest rates, and we wasn't seeing anything that was closing in the 6%. So that let us know that the interest rates are getting stabilized. The feds may drop the rate some more, and I think they're talking about possibly in December. If that happens, that'll be good. The inventory of houses are still low, so there's not a lot of houses available on the market, which gives sellers a really good opportunity to sell houses. Although because the sellers' houses are not moving as quickly either. So just depending on what price range you're in, helps you know if there's going to be a great amount of houses or a less amount of houses. We have a lot of new construction going on. If someone wants to purchase a new construction house, then we have a lot of new construction houses. And as things begin to progress, rates settle down some, buyers are entering into the market more now. So we got like had like an up and down seller's market, buyer's market. Right now, I would say that if you ask me, is it a seller's market or a buyer's market? I would think that right now that the buyers still have the upper hand with the things that's going on in the market. The buyers are able to get more of what they want in order to close on a house. A lot of sellers are paying the buyer's closing costs. I seen an ad yesterday where a house needed a roof. The seller was willing to put a roof on the house. So you have more negotiation power right now. And then another thing that plays in play is that we are in the fall months. Typically, the more aggressive months said that the real estate business is very busy is between March and September. But being now that we're um in the fall, then it's a little bit slower. So buyers have advantages. There's buyers, if you wanted to just get off the fence and maybe go ahead and purchase a home, you do have an advantage now, which those that may change when the springtime comes. That's when people are a little bit more aggressive looking at houses. We talked about there's down payment assistance available for new home buyers. Sometime you can get into a house, and I have had this to happen recently with 100% financing, which means that the buyer got the 100% conventional loan and the seller paid the closing costs. So therefore, the buyer got into a house with not so much money that they had to come out of pocket. But I don't recommend that. If you're looking to purchase a home, I highly recommend you to save up some money for down payment, for your home inspections, for your appraisal. You have earnest money, so you don't want to have the mind frame of thinking that I just want to get into a house and no money with no money down. So that's be sure to be prepared when you get ready to purchase a home. Save up money. And even for people that's renting, the price of rent is going up. A person more than likely is paying more per month to rent a house than they would be paying for a monthly mortgage payment. So for people that's renting and you on the fence about, should I buy, should I rent, you may want to talk with a real estate professional to see what is the benefits, how can I save money by buying a house? How would it, what is going to be my benefit if I buy a house? Or should I continue to rent? So that's something that really would have to be looked on a one-on-one basis. But however, we're here to give you that information because you need to know that some people would just be surprised that okay, I can buy a house and pay less for rent. And then when you purchase a home, and we've said this in the past, and I'll say it again today, that keep in mind that when you paying your monthly payment towards your principal, your monthly payment and the portion is going towards your principal, we do recommend that at least once a year that you pay one extra payment towards your principal. And you have to be very precise about that when you send the payment into the mortgage company, you want to be sure that they know that that is being accredited to your principal. That way that you're building equity in your home. Equity is money that's in your home that you can take out to do things that you need and want to do. It can be for cash out. You may just say, I want to refinance to get cash out. You may want to refinance to buy a car. You want to refinance or to do an upgrade to your house, to add some remodeling. So you have that opportunity to take advantage of the equity in your home. And that's the reason why we said ownership is so important, because it's not only that you can own a house, but you also, as you own that house and you pay the extra money towards your principal, it's just like money is in the bank. So you maintaining your credit, you're doing good, you're doing what you're supposed to do, and now you say, okay, I want to take a vacation. The vacation may be a little bit more costly than you want to, or you may want to do some room additions to your house or do some upgrades. Then you can go to a lender and refinance and get the money out to do what you need to do. And you almost will not see a difference in your monthly bills because you've taken advantage of your equity, and that equity was already what you was paying in your monthly mortgage payment. So you would have got that money, which is rightfully your money, out to be able to take advantage of some things that you want to do. So paying the extra money towards your paying the extra money towards your principal is a very good benefit. A lot of times, a lot of people will do that in excuse me, my phone was ringing. A lot of time, a lot of people would take advantage of that during their tax season. You know, once a year when you get your taxes, someone paid this extra money toward my principal. And it's basically as if you putting the money in a bank as in a savings for you, so you can take advantage of it when you need to. So that's a good plus. You know, when we talk about the advantage of buying, owning a home or buying a house, and then we talk about generational wealth. If you may have a child that may wants to go off to college and you want to pay for their college education, that's a very good opportunity to do that. When it comes to refinancing, and a lot of people are a little bit hesitant to refinance, and you may need to be hesitant, but you want to be knowledge, you want to have the information and have the wisdom of what is the benefit of refinancing, and should I do it and when I should not do it. So taking advantage of that, you want to be sure that you marry the house and date the rate. So therefore, when rates change and you can take advantage of a lower rate, then take advantage of that. It's nothing wrong with that at all. Take advantage of a lower rate. This week, and this is not about refinancing, but it was time for the renewal of my homeowner's insurance. And my homeowner's insurance had gone up. I had been with this company basically ever since I've on the house. Well, no, prior to that, well, I'm gonna tell you the name of the company. So I had State Farm prior to that, and then after that, I changed over to AAA. So it may be about, it wasn't the time that for the length of time, but maybe about 15 or 20 years, possibly somewhere in that time frame, that I had this insurance company that I've had been faithfully using and renewing the policy once a year. And then this year it came out, and I don't know if you all experiencing this, but my insurance payment note came out was very expensive. In my opinion, and when I say it was very expensive, it was like, I think it was about $2,700 or something like that. And I was like, no, 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 no. So what I did was I shopped around and I got some more homeowners insurance that was only $1,083. Now, my point of me telling you this is that when you stay with an insurance company for so long, every year they're creeping up, they're creeping up, they're creeping up. They're never coming down. So, you know, you can see that they're always going up. Then you can take advantage of the opportunity of changing your insurance company and paying a lesser insurance premium. So don't ever have a fear of thinking, well, you know, I've been with this insurance company for all these years. Their prices are not going to come down. They're not going to have mercy on you. So my thing is that they're not going to have mercy on me. They're not going to bring the cost down for me. Then I'm gonna shop around. If I can get the same insurance coverage from another insurance company, then that's what I want to do. And that's what I want to tell you all, that whenever you can take advantage of saving some money with insurance or whatever it takes with home ownership, take advantage of that. There's always a lot of company and a lot of competition that would love to have your business, that would help you to save money. I was talking to my son yesterday and he did the same thing. He renewed his insurance policy and he was telling me that he saved about $250 a month. So always take advantage of those opportunities and shop around. And when you have insurance on houses, then be sure to check that out. You know, you get into a routine of that. I've been had this company for all these years, but you want to check it out and you be up to par with what you should be paying. And more than likely, if you check with another company, you're going to be able to get a lesser premium. Why is now a good time to sell a house? Because the inventory is are sitting longer, but we still got low inventory. We still have clients that are looking for houses and can't find houses. So now is a very good time to sell a house. The homes are holding their value, so that's a good thing. It's not like we're in a market where the prices of houses are coming down tremendously like it was in 2008 and 2009. That's not happening. So the value of homes are being really stable at this time. Serious buyers are looking for higher houses, and the ones that's serious that's looking for houses, they're finding houses pretty quickly, with not having to search a whole lot. I had a few deals in the last month or two, and within the next day or two, when I took clients out, they found the house that they want. So that's good, and it's good when we got inventory like that, opposed to when we had so many offers on one house back in 2021, 22. When a person was buying a house, you put an offer on a house, you didn't know if you was going to be able to get it because there may have been 10 other people trying to get that same house. So now's a great time to be sure to, if you're looking for a home, that you can possibly get what you want and not have so much competition. You can take advantage of the high equity. Most homeowners have built significant equity over the last few years. This is for sellers now. When you're sellers, you can take advantage of the equity that you have in a house. Had another client, and I'm referring to clients so that gives you some examples of what I'm referring to. He bought a house when the market had crashed in 2008, and now he's able to sell was able to sell that house, bought it for 80,000, now he's able to sell it for 235,000. That is what I'm referring to when I said that investing into real estate can be generational wealth. You can take advantage of the equity. It's like putting money in the bank, and then if you know how to manage it well, pulling money back out, and a whole lot of times you're pulling much more out than you put in. So the opportunity to buy a house is now. If you have any questions, let me know. And then I'm going to stop talking so that I can answer questions from the guests. I know I've said a lot this morning, and we won't have a meeting in December. So we'll come back in January, and I'll have some lenders and maybe some home inspectors and different people to talk with you all. I don't think that I've had an appraisal to come on, but I may can get an appraisal to come on for a few minutes, and they can explain to you all what they do and what the difference between a home inspection and an appraisal. So knowing all the real estate terminology, what's involved in it, what you can take advantage of is really, really important. And one time we mentioned on the webinar that you should be putting money back into your house, always doing something to make some improvement in your house, whether it's a light fixture, a faucet, or if you paint, just something to keep improving your home so that when you do want to refinance or want to sell your house, you can possibly get more money than you anticipated. All right, now I'm going to keep it open so that you all can ask me questions. I do believe that this is being recorded. Yes, I believe that Thomas is recording this. I think I had a message that came up and asked, was I licensed in Mississippi and Tennessee? And I am licensed in Mississippi and Tennessee. I had a message that, Thomas, can you put that back up for me? Okay, what are we seeing in the Mississippi, Tennessee market right now? We're seeing that in the Mississippi and Tennessee, it's sort of like, I guess it's sort of like a spiral. And when I say that, you're seeing a fluctuation of houses being sitting on the market for a short period of time, and then you're seeing the houses moving pretty quickly. So it depends on the price range of the houses that's moving pretty quickly. If you got a house in about the 200 price range, of course, less than 200, that's good. But 200 to 250, those houses are moving pretty quickly in the Mississippi area. In Tennessee, they're not moving as faster. We are seeing that houses Some houses are sitting a little bit longer, but if you price a house right when you put it on the market, then it'll sell pretty quickly. When you're working with the client, what's the first thing that um, you walk them through? Basically, the first thing that you want to do is that when I'm working with the client, is that the first step is that I would encourage them to get their pre-approval. Getting your pre-approval is so important because it helps me to know how to help you. And what's required for getting your pre-approval? You have to have at least a 620 credit score. A 640 is better. 60 is much better because it helps you possibly to get some down payment assistance. So you want to have all of your financial docs together, your W-2s, your tax returns, your pay stubs, your bank statements. So that's what a lender will ask. That's what a lender will ask when you going through the first phase of your pre-approval. Are there any lesser known programs or grants? There is some grants in the state of Mississippi. There is grants in the state of Tennessee. However, you would have to qualify for them. Mississippi is Mississippi Home Corp. If you all look at their website, you can see which grants is available for Mississippi. So again, that is Mississippi Home Corp. And for Tennessee is TDH, is where Tennessee Housing Authorities is where you would look on that website site. How much house can you afford with $1,000 a month? Typically about $1,000 a month, with the rates being what they are, you probably can get into a house for maybe about 130, 140, 130,000, 140,000 is what it may be. I was trying to read the messages that came up pretty quickly. So if it's anything that I did not answer for you, I'll be sure to send that message back up, and I'll get you an answer. Okay, what's the biggest thing? The biggest thing that homeowners overlook when they're getting ready to sell a house is that most times homeowners do not think that there is anything wrong with their house. It may be that a stain on the ceiling, it may be some rotten wood. It could be so many variation of things that a homeowner would say. And this is what they'll say, well, it's been like that and I never had a problem with it. But at this time is that you're getting ready to sell your house. You want the most money for your house. So you want to present your house in a way that if you walked in it, then you would want to buy it. So the thing that most homeowners overlook when they're getting ready to sell a house is some of the things that they have gotten used to in their house. It may be a floor, some flooring that's messed up, and they're like, well, that was fine with me. I didn't have a problem with it. But keep in mind that you are selling your house to a new buyer who is paying possibly the most money that they've ever spent or invested on anything. And they want to be sure that everything is right when they're purchasing a home. So when you get ready to purchase a house, be sure to call a realtor and ask a realtor to come and look around and see what would you recommend that I do. If there's some rotten wood on your house, you want to be sure to take care of the rotten wood and have it painted before putting the house on the market. If you see flaws that needed to be addressed, then we do recommend that you address those flaws. However, it's not mandatory. A buyer can always come and ask for allowances and things such as that if they would accept your house in the condition that it's in. So be prepared that when you don't want to fix up your house, be prepared to accept less than what you expect, because that's what typically what happens when you don't do what it needs to take to get a house prepared to sell. What's the question you wish that more buyers would ask you? I think that I would like for more buyers. It's not necessary that you ask me, because what I'm going to do is I'm going to upfront tell you as much as I can, because I want to prepare you when you're purchasing a home. But what I would like it to say is that I would want a buyer to express what they're looking for in a house, their criteria of what they want their new home search to be. But then also be a little bit linear. Just to give you an example, is that I had a client that said, okay, I don't want to see any houses that has any carpet on the floor. Okay. So then when they send me houses, then they send me houses that has carpet on the floor or hardwood. So the answer is being very precise about what you want and then not making it so strict that even the realtor doesn't know exactly what you want, and then you could possibly could have overlooked the house if you don't make it just so like, I don't want this, I don't want this, I don't want that, but if you want 3 bedrooms, you want 2 bathrooms, those things are a must. I want a fence in backyard. I got a dog. Those things are a must, but not making it so strict that even the realtor is confused about what you may want, and then you miss out on a house that you possibly would have liked it really well because this is what you have said your criteria is. And another thing is that I do when I'm with a client, I try to really get a feel of them. Even if we go into a house and they've told me that, I don't want this, but I don't want that. But when we go inside some houses, they'll give me feedback, and I pay attention to their feedback to know, okay, okay, I remember that you don't want a house with a garage. You don't want a house that doesn't have a shower. So those things sort of help you to your realtor to help you with your new home search and to make it a little bit less stressful for you. The difference between being pre-qualified and pre-approved is that pre-qualified is when the lender has um, looked at your documents on a lower scale, meaning that they have not looked at everything really into details. So they pulled your credit score, your credit report. You've told them what your income is. So that's when you can get pre-qualified. So pre-approved means that that's when the lender has looked into everything very much in depth and possibly have sent it to the underwriter, and that's when you get your pre-approved, meaning that everything has cleared. So the pre-qualification does not mean that everything has been looked at into depth. And then there have been some clients that have gotten pre-qualifications and maybe not have told the lender all the detailed information and have not been honest with the lender. When that happens, then your loan can be rejected because they dig very deep when it comes to providing you with financials, monies from the federal government. So they get very deep into your business. And the way I always looked at it, just to help you to make it a little bit stressful for you, the way I looked at it, and I bought a lot of houses before, I looked at it the fact that everything they asked me for, I gave it to them. My thing was, they got the money, I want the money. So in order for me to get the money, I've got to give them everything that I've done. So it wasn't in a I didn't have the mind frame that I was upset. They asked me for this, they asked me for that. Every time they need all that information, and if they ask you for it once and you provided it once, keep it in your email, send it to them again. So being very cooperative and being very prepared to purchase a home makes a very big difference and is less stressful for you. So just when you're getting ready to purchase a home, you're going to have bank statements, you got to have W-2s, you got to have check stubs. If you're getting child support, you got to have verification of child support. If you're going to get money out your 401k, you got to be prepared to provide that information. If you're going to be getting gift money from a relatives, and relatives can give you gift money. If you're going to be getting gift monies from a relative, they have to look at that relative have to sign a gift letter, but they have to look at that relative bank statement to show that that money came out of that account and that it was possibly season money. What season money means that it has been there in that account for a while. So be prepared for those things and know that, if this is what the loan officer is asking me for, this is what I got to give them. And don't huff and puff and get angry. Know what you're doing. You're dealing with the federal government with your FHA loan, with your VA loan. So you're dealing with the federal government with some of these things, and they go deep into your business. And that's what it takes to get a house. But it's really left up to you, because you can make it an easy process or you can make it a hard process. I recommend that you make it an easy process. Be prepared. And then keep some of your bank statements or whatever you need in your email. So if the lender said, or the lender said that I didn't receive this, oh, I can email it to you. Send it back to them again. Just don't get frustrated with it. This is a part of the process. Okay. So we had those questions. I wanted to check and see, does anyone else have any questions? Tabitha or Kelsey? No questions? Okay, well, I am so glad that you all joined me today. We'll be back online with Let's Talk About Real Estate in 2026. I'm really expecting that 2026 is going to come in with a bang. If you know anyone that's looking to purchase or sell a house, ask them to please call me, Area Mays, at 901-335-9324. Again, that's Area Mays, 901-335-9324. Let me know if you all have any questions, and you all have a good and blessed day. Thanks for tuning in. Thank you, Brenda.